Hi, Doug.
Hey.
Today we are going to be discussing new construction versus resale and what veterans really need to know. Should they buy new? Should they buy resale? And what does the VA home loan look like when they purchase new construction or a resale home? 14 years in real estate. I helped so many folks, so many veterans navigate through new construction, so many builders who our incentives are pretty huge on their homes, especially inventory homes, marking the price down, closing costs, buying the rate down, whatever it may be, and even getting a lot of upgrades. From a loan standpoint, if a veteran is looking, say, at a new home, whether it's a build, whether it's a spec, what are some really key things from a loan standpoint buying a new home?
Well, the new homes are really nice for veterans because we can get pretty creative with them. They're doing the markdowns, the buy downs, all the other fun stuff. But another thing veterans get that no one else does is the seller can actually pay off veterans' bills up to 4% of a sales price. So if they bought a $600,000 house, instead of marking the price all the way down, you could say leave $24,000 in there and pay off all my credit cards at closing, or pay off my car. I have an IRS bill. I can pay that off. Things like that. And we can use that to qualify them as well. Every $1,000 added is only about $6 to your loan. So it's kind of nice for people. You're going to spend more, and it's a nice way to help balance it out. A lot of veterans with the new construction get their earnest money back closing. So you could literally get your money back and have a ton of your bills paid off and be in a new house. One of those parts of VA loans people don't really know about because a lot of people don't talk about it. Any seller could do it. You can do it on resale. These managers and these big builders, they get paid on how many houses they sell.
Oh, yeah.
So they'll do anything they can for you because the difference of them selling 10 less houses is half their salary for the year. So VA is great that way. And to get the VA loan, it's really not that hard. One, your payment's going to be cheaper than if you go to conventional or FHA because you don't have monthly mortgage insurance. For those of us veterans that make a lot of money and buy a $2 million house, you can do that VA without any money down because they got rid of the cap on that. VA technically doesn't have they don't have a minimum credit score. Now, your actual credit will end up, if you behave for the last year, you get a VA loan, no matter what your credit score is. Now, you're better off with a higher score because 580 versus a 680, my rate's going to be 0.5% better.
Okay.
But it's nothing drastic.
So when you say behave, what does that mean?
Just if you have clean credit for 12 months, you're good.
Yeah.
And that's another thing VA does different than Fannie Mae or FHA or USDA. They're real strict on what percentage of your income you can have for your payments. If I make $15 an hour or $50 an hour, I can have a lot higher percentage of my income go to debt and still eat if I make $50 an hour.
Okay.
If I make 15 an hour, I'm going to get to a certain percentage. I can't eat. So VA does it actually smarter. They just want you to have a certain amount of money left over each month. We've seen people, they've had 65% of their gross income to buy a house. They may be self-employed, so it doesn't reflect everything. They may have other jobs that don't qualify. Even if you're totally screwed up, I mean, we'll just pick the last day you were late and we know what day next year you're going to.
When you actually go under contract and you're building a home, they lock in the price. It's like you write the contract, put your earnest money down, and then, the price is locked in. A lot of builders too right now are giving really great incentives on all the upgrades.
Because as soon as the rates go back down, prices are going to go back up. Another great thing with VA, and everyone wants the time to market, the dumbest thing to do. I've been doing this for 30 years. And if I knew how to time the market, I wouldn't be working for 30 years, right? I'd be day trading a yacht. So this is a great time to get your stuff done. And VA has the best refinance. It's called an interest rate reduction loan. And all you have to do is show us that you made your payment on time. We can refinance you without an appraisal or a pay stub or a bank statement. And you can go to closing with $50 or less and take advantage of a new rate. So you got 6% fixed forever. And the average rate for the 7.5, pay rates don't fluctuate or go up on you. $500,000 house, if it only went up 5% a year, that's $25,000 a year in your pocket. So in 8 years, you got $200,000 equity. It's $700 more than my rent was. Your rent's going to go up. If you have to move every couple of years, we all know how many thousands of dollars it costs to move. and your kids have to find new friends at school, and you can't paint the room purple for your kid, or the meth head that moves into your apartment next door. At least you have your own home.
But here's the thing though, some of the homes that I toured, and I'll tell you guys, the backyards were huge.
There's some great lots, and you just got to look around. If you're willing to drive an extra 15 minutes, you can save $100,000 on a purchase price and get a bigger yard. Take a line of credit out on it and buy 2 more rent houses. Normal people don't get any true wealth without owning real estate. The standard rule is real estate will always don't buy a house. If you bought the house in 2010 and wanted to sell it in 2011, you weren't making anything. You waited till 2020, you're sitting pretty. You don't buy it to get rid of it right away. If you keep a house, the normal time someone keeps a home 7 years, you're going to make people put it off. I'm just going to wait. Wait for what? Buy it, live there, and then upgrade.
Yeah.
You have a client coming in from California Friday. He's buying his 4th house. And he's 34 years old.
I know.
His house is $650,000. It's like 1,400 square feet. You can actually do 2 at one time. I bought a house, and I can only get a $200,000 house, and I go get it on a VA loan. I can make $500 a month if I keep it and rent it. If you're missing any of your VA eligibility, which means you own another house, the 2 loans combined to have nothing down would be $800,000. So if I borrow $200,000, I could get another one for $600,000 and keep it as a rental. Let's say I wanted to get a house for $1 million. $600,000 of it wouldn't have a down payment. The last $400,000 would have a 25% down payment. So I could buy $1 million house VA for only $100,000 down. It sounds like a lot, but it's only 25% of the difference. So VA is definitely the way to go. Go to some bank and be told that it's so hard, or you can't do this, you can't do that.
Yeah.
You just don't qualify. And they don't explain. You renew your lease in May, and then next year you buy it. You renew it twice, and then you're ready. Like, it's not the end of the world.
Like, it doesn't mean you have to be ready in 30 days.
Like, slow down. Look at the numbers on this. Earnest money on a house. Typically on a resale, it's at least 1% of the sales price.
And
then if it's new, when you get in, you don't have to worry about fixing anything. They have a warranty too.
10 years foundation.
A lot of times it's half or less than half.
Who really want to resell.
I love massive trees. I like the fact that I have 2 little kids, and my wife's parents live 2 blocks over, and they can help with childcare. Otherwise, I'm spending $2,000 a month. And you can't negotiate with sellers to cover closing because that's been listed for 45 days. And
with the termite inspection, that is mandatory.
VA doesn't require it. You're going to fix these things or take this much off the price or pay more to closing.
If a veteran wants a resale home, same thing. It's no down payment because of their VA benefits. Closing costs, we can negotiate with the seller.
A 0.5% higher interest rate, and they pay some of that.
Oh, veteran wants to navigate through a new construction, resale.
They have 2 more kids.
Yeah.
And one of them works from home. I'm going to save money if I just go straight to sellers. No, you're not. They are obligated to represent that seller's interest.
Is it a good time to buy?
I think it's great. A fixed rate of 6%, for example. Inflation right now is in the mid 3s. Somebody's committing to you to make only 2.5% to loan you $500,000 and stick with that for 30 years. I think it's a very nice balanced market. It's landed to a buyer right now.
It is.
And if you're a disabled vet, there's nothing good about being 100% disabled except when buying a home. You don't even pay property taxes in Texas. If you're less than 100% disabled, there are some discounts. A lot of people qualify just off their disability.
No, the benefits of owning a home, especially for a veteran, they served, they deserve,
Yeah, we can look at your income, and if nothing changes, this is what you can buy next year. It doesn't have a rule against that. And the best part is when you're really screwed up, you can change your whole year. You get your financial literacy. You start saying, nope, I'm not getting DoorDash, I'm buying a house. Like FHA buyers, only 3.5% down. Let's look at what you spend on fast food in the last 3 months. That's how you come up with it. You're like, oh my God. We waste money on everything. We all screw up, or life happens. People get embarrassed. It doesn't matter. And it's not a forever thing.
We're like, I feel transforming their life too. So Doug, thank you. The economy is great. Texas is great. Market is not crashing. Balancing prices are stable. There's a lot of great incentives out there. So if you are thinking about buying a home, get the ball rolling now. Thanks, everybody, and we will see you very soon.